the AI is starting to show more friendliness. Just last week, we had a very similar signal that the AI did not allow to occur. This time it did. It was that close. Literally 5 days made the difference.
What did the AI see exactly that had the iFlip AI go long today, of all days, despite the Microsoft scare, and the kind of the range bound price action that we've been seeing recently?
Well, actually, from the AI didn't really see anything in this particular case.
Okay.
Let me advance this a little further. Last week, we had the way our product works is we have a set of algorithms that do basic money management and certain kinds of entry signals and exit signals. Behind that is the machine learning slash AI component that actually builds other algorithms that are pushed into our operating algorithm. And what happened today, or actually last night, was the AI gave the go ahead for the pricing algorithm to take signals. Just last week and most of last year, the AI was prohibiting all kinds of algorithmic signals to buy into the market because the AI had a lot of data that said it was bad. For example, credit card defaults, auto loan defaults, Fed funds rates, et cetera, et cetera. Expectation on the Fed funds rate as measured by the S&P 500 futures, things like that are what the AI looks at. And right now, my belief, if I'm trying to pinpoint it, is the AI signal that would prohibit an entry long into the market based on based on the Fed funds futures rate, which is another component, is now saying that the hike that we expect the Fed to give in early February is only going to be 25 basis points. And that moved down from 50 basis point increases to the expected 25 basis point increase, actually pulled a trigger away from the machine learning component, is what I suspect, because remember, it's machine learning, not me. And it pulled the signal to abort the algorithmic signals away. I know that's very complex. At the end of the day, let me say it this way. The machine learning is now allowing other kinds of trades to be affected, and they are no longer prohibiting it. So at least in the short run, and that's why I mentioned last AI circle, the AI is starting to show more friendliness, and it did literally today. Just last week, we had a very similar signal that the AI did not allow to occur. But this time it did. It was that close. Literally 5 days made the difference. And that's the difference between machine learning and me. I suspected it. That's why I warned everybody 2 weeks ago that we could be getting long. And it took literally till today to do it. Did that come in nice and clear, Aaron?
Yes, that came in so much better. I think, sound off in the comments if you guys followed that. That didn't cut off or get blurry or anything at all. So if I'm understanding it correctly, that it's like the algorithms are like foot soldiers that are itching to get into battle, that are itching to buy, and the AI is kind of like the general that says, "Well, hold your horses. The battle conditions aren't correct yet." Right, so it's a waste to get in now, and it kind of like holds it back until today. Is that correct?
That's a decent metaphor. They're actually working together. There's, again, the machine learning AI component builds its own algorithms, and those algorithms create buy and sell signals. Get in here, get out there, get in here, get out there. That's what the AI does.
Okay.
But the way it signals is to say, get in or get out. It also has a signal to say, you're not in the market, stay out. So it's either stay out or be in or get out. For most of 2022, it was stay out. However, in the first 2 weeks or almost 3 weeks of 2023, I could see that that signal was waffling because
Ah,
there's other AI algorithms that are very successful that were starting to show long signals. Not the one we use, but other ones did. Not as robust as the one we use. They were starting to show a buy signal was imminent. That's why I suspected the one we use was going to work as well. And we also have this, we have the algorithmic signal. Generally, you can't see it on the screen because I've taken that off, but generally we want to be in the market when the market is showing movement above a 200-day moving average on the S&P 500. And it's finally confirmed that. So this here, everybody, is a algorithmic signal that occurred. Last year, there was plenty of times that the AI held us out of a signal to buy when the market was above the 200-day moving average, for example, but it wouldn't allow us to. This time it did. And like I said, I suspect that it came from the Fed futures, the Fed funds futures information that we feed into it that waffled. That's what I suspect. I'll never really know. I can't know that unless I rerun it without the Fed futures data and see if it made a signal.
right.
So, and that's just too difficult and it's not necessary. So the bottom line is, everybody, we're in the market, and that means we're probably with an expectation of 420 on the S&P Spider, and with a very low risk trade, maybe only down to about 394, which is only about 6 points down and 20 points up. That's a very good risk to reward bet. So let's hope that the information tomorrow comes out well for all of us, and know that tomorrow is a big day, because the amount of information that is coming out tomorrow is massive, and it will move the markets.